Hello, welcome to European Open briefing for Friday, February the 22nd. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So we can see there's quite a bit of risk on still in the markets, mainly on the back of trade optimism. Chinese stocks closed sharply higher this morning, and we're also seeing a positive start in Europe at the moment. Although we did see some negative data out of the US yesterday that did pressure the US dollar a little bit before the dollar managed to recoup those losses. Dollar index is currently slightly lower at 96.54 dollar yen, more or less flat at around 110.75. The commodity-linked currencies, they are mixed today. The Aussie is recovering yesterday's losses following that slump on reports that China may have banned Australian coal imports. The kiwi, though, is down. We did hear the comments from the RBNs that rates might be cut if banks' capital requirements lead to tighter financial conditions. And the loonie is also down. Well, it was down earlier, slightly firmer this morning. Yesterday, it came under pressure on comments from the Bank of Canada Governor Stephen Poloz, which were very cautious about the prospect of rate hikes. Let's now turn to the dollar index. We can see that it is now trading more or less flat, despite the fact that yesterday there was some bit of panic following the US data, which showed durable goods orders coming in below expectations. Possibly that was for December, possibly pointing to a weak fourth quarter GDP number that's due next week. We also had manufacturing surveys for February, which are also below expectations. So again, that's once again heightened concerns about slowing global growth, but we do still have hopes that the US and China will be able to strike some kind of a trade agreement. Talks are taking place still this week, though they are reportedly reached a more difficult stage at the moment as they try to work out details on structural reforms, which China is still trying to resist, given and the US is basically the US. That's one of the more important issues for the US to secure from China. Looking at sterling now, we can see it's holding above the 1.30 level, despite the fact that there's still plenty of uncertainty as to what exactly is happening. Some talks say that some reports are suggesting that we're not going to get a revised deal until mid-March. Other reports are saying that the UK and the EU are close to working out a new legal statement that would accompany the withdrawal agreement. So this would be a separate statement, not part of the actual agreement itself. And this could be put to vote to MPs as early as next week, though the EU is saying that they may not finalize the details of this text until after it's been given the go-ahead by UK Parliament. There's also reports saying that Brexit might still need to be extended, possibly as much as 3 months, even if there is a deal due to the exit date being so close on March 29th. So that would be purely for technical reasons. So let's now take a quick look at the commodity linked pairs. We can see the Aussie trying to recover from yesterday's sharp losses. So there were reports that China may have banned coal imports from Australia, but the Australian government has denied this and is saying that this is just part of import quotas being applied by China. We also did have some comments from RBA Governor Philip Lowe saying that interest rate next year may still need to be increased, so that may well be appropriate according to him. Slightly more hawkish than his dovish shift earlier in February. Looking at the New Zealand dollar, though, it did come under selling pressure after the RBNZ said that the higher capital requirements for banks, if they were to lead to tightening in financial conditions, a rate cut might be needed. So that's the kiwi plunging below the 0.68 handle. So it has recovered most of those losses at the moment. And looking at the Canadian dollar, it also came under pressure yesterday. Stephen Poloz, Bank of Canada governor, said that the path back toward neutral rate range is highly uncertain. So that basically dampened expectations of a near-term rate hike by the Bank of Canada. And coming up later today, we're going to have Canadian retail sales numbers at 13:30 GMT. At the moment, the loonie is trading above the 1.32 level. So that's it from me. Thank you very much for watching and have a great day.